Hi everyone, welcome back to Be Rich. It's me Vinod recording from Bangalore. Yes, I'm back from Singapore and I'm back in India and I'm in Bangalore. I hope to meet some of you in this weekend, 31st, who have managed to sign up and get the information. And consecutively, since there's a good response, I'm doing another follow-up meet on the 7th of June. So if you can't make it on the 31st, you can definitely try and come for the 7th. If you are still interested in making it for the 7th, please do drop a message to me on Instagram in our group, and I will try and get my team to reach out to you and get you the details on where it is happening and how you can reach us there. It is a meet just to discuss with like-minded people about investing and opportunities of investing, especially in the Indian equity market and also American equity market. So yesterday I had spoken about Pfizer, and that was from Singapore. Today, I wanted to talk about Kraft Heinz and what is happening with Kraft. A lot of you have been seeing value unlocked in Kraft, and we're wondering if you should be investing in Kraft Heinz, especially when someone like Warren Buffett has 27% of the company in his kitty. So, should you also be diving into it? Before I get into what is happening in Kraft in terms of diving into it, let's briefly look at what's been happening in terms of numbers the last quarter. That's quarter one in the US. And then let's talk about what's happening segment-wide performance. Then we will get into the red flags and value. Then finally, we will dive into concluding if Kraft Heinz should be on your watch list or not. In terms of revenue, it's been down 6.4% year on year, missing expectations, which is not good. EPS is also at 6.2 cents to a share, and net income is down almost 11.2% compared to the same quarter last year. Segment-wise, North America is down 7% in terms of sale, and even internationally, they're down 4.1%. Free cash flow has also come down to 3 billion, and the debt to equity is standing at 0.77, while net interest coverage is 6.5 times. The red flags. They have filed an impairment charge of $1.4 billion on the brand which they own called Oscar Mayer, and market challenges has been one of the major red flags. There's been a shift, quite a huge shift in the US in consumer sentiment towards eating these kinds of food which Kraft makes, and also there's been a huge uptick in the number of new private labels which are coming up in the United States. The pressure from the private labels, capturing market from them, and also the changing consumer mindset has led to quite a dampener in their earnings. And one of the other major red flags is you've been celebrating that Warren Buffett has 27% stake, but Berkshire Hathaway might look at selling this stake because recently the Kraft board and Berkshire Hathaway had a discussion, and Berkshire Hathaway has decided to let go of their board positions, and 2 of their board members have resigned, and currently the Kraft board is now constituted by 10 members, and Berkshire Hathaway has come out saying there's nothing ill or anything wrong with the company, or we don't have any ill will. It's just that we didn't want to sit in the board anymore. So this has also led to speculation that it may be the sign that Berkshire Hathaway might be liquidating its position in Heinz. If that is happening, it's going to lay further pressure on the stock in terms of price. So this is where we stand. Now let's look at terms of value. What is the value right now of Kraft Heinz? Well, Kraft Heinz PE ratio is at 11.7. That's quite reasonable. And the PEG ratio is 1.4, which is also quite reasonable compared to the growth prospects. But the price to book is at 0.67. That shows that investors are not really very comfortable with holding the stock right now, is what can be read. Dividend payouts have been very high recently, and people do feel it is kind of unsustainable, these kinds of dividend payout. The current price Kraft Heinz is trading at is $26 a piece. Discounted cash flow, we put it at 34, and the relative value is at $45. That means intrinsic value is at 34, and the company is trading at a good discount to the intrinsic value. But if you look at the historical averages, at least in the last 5 years, the current price is a great entry point if you're a value investor and you believe in the brand and you believe in the business. But that's where the problem lies. The problem lies, this is all looking back at hindsight. The 5-year average is on hindsight. The current valuations are all on hindsight. The problem is, can we see the future? And that unfortunately we cannot. All we can see is what is happening and how we should react to it. And do we believe the moat of Kraft Heinz is strong? One of the major developments in this whole ecosystem is the government of United States has decided to slowly wind down this program called SNAP, which is Supplement Nutrition Assistance Program. And that gives the funding to around 42 million Americans. Around $290 billion is what's been planned to cut from that program, and over a period of 10 years. And what this program is gives opportunity for people in this 42 million group who are lower income, who can't afford. It gives them an opportunity to buy food assistance through these coupons, and these coupons are funded by the American government. And most of the people who use these coupons tend to buy products of companies like Kraft, Kellogg's, and Smuckers and Koranga. So if you look at it put together, it is going to have a huge impact on these companies going forward in terms of earnings, because there is going to be a dip in consumers buying their products, and even going to have a roll-on effect in companies like Walmart, which 98% of SNAP is usually used at Walmart. So the question begs, how bad is it going to be? How long is it going to be? And has this been priced in? A lot of analysts, like in Morgan Stanley, feel companies like Heinz will survive this and it won't be anything too brutal, because considering the price of companies like Heinz is already corrected almost by 20% approximately, or since the beginning of the year, they do feel that this has been factored in and still offers a great opportunity to consider these companies. That is a question which I leave to you to ponder on. Of course, Kraft is also in discussions internally with their board of maybe even selling off Oscar Mayer, because that's where the impairment cost was done. What was the impairment cost? Let me explain it to you in the simplest way. They felt the brand of Oscar Mayer's, which they owned, was worth X amount. Now they feel, looking at the brand loss in terms of value and market share and consumer sentiment changing away to more healthy options, that the Oscar Mayer brands has been brought down by a value of $1.4 billion. The other brand they may decide to sell off is also Maxwell House, which is a coffee brand owned by them. So these are things which are there on the cards for Kraft Heinz. And if you see the entire landscape of all the other companies which are there, who are their competitors, such as WK Kellogg's, JM Smucker, both are still trading at value as Kraft is. Kellogg's is at $27 and JM Smucker is at $172. So the question begs, is Kraft the right option to look at in this landscape, or are there other ones better to look at in this landscape? That is what I am leaving you to ponder on at the end of this video. I want you to think about what I've said about Kraft and giving you the outlay of the competition, and where they are also, all of them are very good value right now. They're all undervalued. Is it something you should consider Kraft, or should you be considering their competition? Is what is the question. So I would like to know your comments and your feedback. I would like to know, what company are you considering as a defensive stock in this situation? Or do you feel this whole sector is not a great defensive sector, considering all the things that are happening with the tariffs and what is happening in the American economy thanks to the tariff? It did break news that American courts have told that Trump cannot do these tariffs. They're overreaching his powers, because that's been filed in multiple courts. And this is what I was talking about on LinkedIn when I said this kind of uncertainty is not good. Yes, you may be feeling that, okay, now the tariffs are not there, what is there to worry? The problem is, these kinds of things going back and forth, makes it very difficult for businesses to forecast their forward cost, their forward earnings, their forward, logistics. All of this gets into trouble because there's no clear guidelines on what they should be charging or what rules they have to be following, because no one knows with clarity what is going to be happening. This is even true in terms of their budget. which was passed in the House with a very narrow majority, which is sitting in the Senate now, and there seems to be stiff opposition in the Senate. And it might be changed or maybe sent back to the House to review and revise with something else. So all this drags on, further complicating and compounding the issues which I was talking about. In leadership, in government, what investors always look for is not what is right or wrong. Always what we look for is certainty and stability. If we have stability and certainty, then we clearly know how we can make money in our businesses. And that is what is sorely lacking right now in the world. So keep all this in mind. Like I said, do let me know in the comments what you think and which other company are you considering and what I can talk about next. Like I said, as far as Indian equities are concerned, I am talking about Indian equities on Instagram. You can catch me there where we can talk about Indian equities. Here, like Anand has requested, I'm keeping this purely for American stocks and international stocks, and we will be trying to focusing on that on Be Rich. If you are looking for Indian equity and Indian stocks on YouTube, do catch my brother on Money Page, where he's talking about Indian equity and Indian markets in great length there. Thanks for watching the video as always. I hope you had a wonderful day and a wonderful evening. Nothing else more to say than good night and see you tomorrow, where I'll have something more for you. Bye.